Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Ur-Energy Inc. Annual Report. Ur-Energy Inc. is a uranium-focused company that provides various services related to the exploration, development, and operation of uranium mineral properties. At its core, the company's primary business involves acquiring, exploring, developing, and operating uranium mines across the United States. The company's portfolio includes 12 projects located throughout the country, with its flagship property being the Lost Creek project in Wyoming. This project alone spans over 35,400 acres, making it a significant undertaking for the company. By providing these services, Ur-Energy Inc. plays a crucial role in meeting the demand for uranium, which is used as fuel in nuclear power plants. In essence, Ur-Energy Inc.'s business model revolves around the exploration and operation of uranium mines, positioning the company at the forefront of the uranium industry. Ur-Energy Inc.'s stock price has skyrocketed by 85.54% in the past year due to a combination of factors. The surge in uranium prices and demand is a major contributor, driven by increasing worldwide demand for nuclear power as governments prioritize reliable, low-carbon electricity sources. This has led to supply constraints, with significant production shortfalls from major producers like Kazakhstan. The global shift towards embracing nuclear power for energy security and climate change objectives has also been a key driver of the stock price increase. Favorable nuclear energy policies, including supportive U.S. executive orders and the designation of uranium as a critical mineral, have bolstered long-term market confidence. Ur-Energy's operational developments have also played a significant role in its stock price growth. The company has made progress at its key projects, ramping up production and optimizing its plant. Additionally, Ur-Energy has initiated development and construction activities at its second fully permitted ISR facility, Shirley Basin. The overall momentum of the uranium sector has also contributed to Ur-Energy's stock price increase. The Sprott Uranium Miners ETF, URNM, which includes Ur-Energy, has experienced significant gains, reflecting growing institutional investor interest and capital inflows into uranium mining companies. Ur-Energy Inc. maintains a market capitalization of $1 billion, broadly in line with the industry peer group. Ur-Energy Inc. trades at a higher price-to-book ratio of 6.39 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The company maintains a moderate leverage profile, with liabilities making up 32% of total assets, suggesting a balanced approach between risk management and capital efficiency. Average liabilities have increased consistently as the company expands. Importantly, both assets and shareholder equity have grown at least 20% faster than liabilities, indicating that the business is expanding substantially and generating value after covering its obligations. Shareholder equity has grown consistently, but operating income growth is weak or inconsistent. Equity expansion may be driven by financing activities rather than core business profitability. The share count has increased over the past 5 years, while revenue has continued to grow. This suggests the business may rely on shareholder dilution to fund expansion. Investors should closely monitor whether growth can eventually be sustained without dilution. The income statement shows that the company have been growing its revenue annually, but the operating income have not been increasing. This shows that the business is under pressure with rising cost. The primary drivers of revenue growth or decline for a company can be attributed to several key factors. Firstly, uranium production levels at Lost Creek wellfields play a crucial role in determining revenue growth. The market price of uranium is another significant factor, as fluctuations in this price directly impact the company's revenue. In addition to these internal and external factors, sales contracts with leading nuclear companies are also essential for driving revenue growth. Multi-year sales agreements with base annual deliveries can provide stability and predictability to revenue streams. Furthermore, the exercise of warrants and collection of proceeds from such exercises can also contribute to revenue growth. However, there are also potential drivers that could lead to a decline in revenue. These include changes in market price of mineral properties and assets, as well as adverse changes in business climate or legal factors affecting mineral properties and capital assets. Sales of inventory from the Lost Creek facility may also impact revenue if not managed effectively. The net income of the company experienced a significant fluctuation between 2024 and 2025. Initially, it decreased by $21,709, resulting in a net loss of -$74,898. However, this trend was reversed due to higher production rates at Lost Creek in 2025, leading to an increase in net income. In terms of profit margins, the gross profit margin showed significant improvement, rising from -26.7% to 0.3%. Conversely, the operating and net profit margins declined, decreasing from -186.5% to -100.4% and -157.1% to -223.6%, respectively. Despite these declines, the average profit margin improved from 16% to 17%. Additionally, the profit per produced pound sold increased from $10.12 to $10.58. The company's debt level and interest expenses have undergone some changes over the past year. Initially, the aggregate principal amount of indebtedness stood at $120 million as of December 2025. However, by March 4, 2026, this figure decreased to $95.7 million. This indicates a reduction in debt levels. Regarding interest expenses, there is an increase observed in 2025. The interest expense increased from -$336 to -$1,947, resulting in a net increase of -$1,611. Additionally, the company reported an interest expense of $1.6 million for 2025 on another page. This suggests that the company's interest expenses have indeed changed significantly over the past year. Management is optimistic about the company's outlook, citing record nuclear generation levels and projected growth rate of over double from 2026-2030. The uranium market is expected to be influenced by various factors, including climate change, geopolitics, and trade actions. The company plans to maintain operations at Lost Creek in a safe and compliant fashion while commencing production and commissioning Shirley Basin operations in 2026. This will increase production capacity by 1 million pounds UO per year. Management also expects revenues of up to $82.9 million in 2026 from uranium sales. In addition, the company plans to focus on ramping up and optimizing operations at Lost Creek to increase production rates. Exploration programs have been initiated at Lost Soldier and North Hadsell, with plans to complete drilling at North Hadsell and then proceed with exploration drilling at LC South in 2026. Management's strategy is centered around increasing production capacity while maintaining safe and compliant operations. The company is poised for growth as the uranium market continues to expand due to increasing demand for electricity driven by data centers and AI expansion. Based on the company's financial statements, it is clear that they have made some notable decisions regarding their finances. One of these decisions is related to dividend payments. The company has explicitly stated that no dividends have been paid on common shares to date and does not intend to declare any in the foreseeable future. In addition to this, the company has also chosen not to repurchase its own equity securities during the fiscal year ended December 31, 2025. This means that they have not bought back any of their outstanding shares. These decisions suggest that the company is prioritizing other financial goals or strategies over these two options. Concerns about inventory buildup and supply chain disruption. The extracted summaries reveal several concerns regarding inventory buildup and supply chain disruption. One of the primary concerns is the potential loss of or damage to product inventory not fully covered by agreements, indemnification obligations, or insurance, page 42. Additionally, inflation and supply chain challenges are likely to continue for the foreseeable future, page 43, which could lead to disruptions in the supply chain. The company's purchasing strategy also raises concerns. For instance, suppliers of electronics and instrumentation components may purchase necessary materials from China, which could be disrupted by sanctions, counter-sanctions, or other events, page 44. Furthermore, the company has purchased a significant amount of inventory, including 100,000 pounds U3O8 in 2025 Q4 to maintain a strong product inventory, page 49. The financial implications of these concerns are also evident. The lower of cost, or NRV adjustment, increased by $3,302 in 2025 compared to 2024, indicating potential inventory buildup, page 54. Moreover, the company's inventory position for 2025 was established by purchasing £300,000 and borrowing £250,000 in 2024, page 56. The data also suggests that there has been an increase in inventory levels. The inventory increased from £335,327 to £406,089, 21% increase, between 2024 and 2025, page 59. Furthermore, the company's inventory levels are significant, with $24.3 million as of December 31, 2025, page 70. However, there is also a concern about potential disruptions in supply chain due to delays, reductions or stoppages of uranium extraction activities, page 72. Overall, these concerns highlight the need for careful management and planning to mitigate the risks associated with inventory buildup and supply chain disruption. That concludes the financial summary for Ur Energy Inc. Feel free to comment below, and I will be happy to answer them when possible.